In this video, I'm going to go over candlestick patterns and their formation, their shape. I will go through each one of these and explain to you why I consider them extremely important. And identifying major changes in market, some of these are extremely powerful signals on the higher time frame charts, and they're quite often overlooked because people don't understand what they're representing. So just before we dive into, say, these individual candles, I just want to explain what the body and the wick is. So the body of the candle is the square part, and the wick, which goes up and down, is exactly that. So this is the open area. So this is where it opens. So as you can see, it's closed there and opened here. And then this is where it closes at the top, or it could be the other way around. So the body is indicating where it opened and closed for that particular time frame. So for the week, this one here is opened at 22,430 and it closed at 19,540. If you're unsure how I'm working that out, it's up here at the top of the screen. I'm just circling it with my cursor. You can see open, high, lower, and close. So I'm just looking at the open and the close. So this candle here's open was 21,998 and the close is 27,972. Okay, so the wick is what's happened in between, and the body is what happens for the open and the close. So jumping back onto these, and let's just go through them quickly, and I'll try not to bore you too much. But the bullish engulfing candle, and this is very important, needs to go below the previous wick low, not the body. It's below the previous wick low and above the previous wick high. So it engulfs it completely, lower and higher. And the bearish candle is exactly the same. It needs to engulf it above and below. These are trend reversal indicators just in itself. So a good example, there's one right here. This one right here. You can see that it's opened and it's gone lower in the wick and then it's closed higher, for example. And that was a trend reversal. Now, they're not always as clean cut as this, and that's why you'll see a lot of other candle formations happen. Let's just see if we can find a bearish one. Here we go. And this is on the weekly chart because this is why I'm emphasizing how powerful it is. That is a bearish engulfing candle. The wick goes higher and then it closed lower. That is a trend reversal. Okay, so we've covered bullish and bearish engulfing. I'm going to just give you a quick rundown on these. The Harmony, these are just basic candles open and closing. There's nothing trend reversal indicating in this whatsoever. Yeah, you can read the description for yourself. I don't look for those on the chart. It's just an everyday candle to me. The close of a candle in regards to the previous candle, when it's not bullish engulfing, but the body here is higher close than the previous. So obviously it opened where the other one's closed. The wick downs are about the same, but the close is higher. So that's generally a bullish pattern, and the same in reverse. So jumping back on the charts, this one here is a prime example of exactly that. The wick did not go higher, so it's not a bullish engulfing, but it has definitely closed lower. So yeah, that's it. See where this one here, for instance, on the weekly has not closed lower than this one. So the open was there from the previous candle and it's closed here, but this wick didn't even get down there, and then the close was only slightly lower. So that's not one. This is it's not a very powerful one, but it's done it. This here is basically the wick's gone slightly higher, but it has just closed lower. So it's just simply telling us that. No different to here. They're all sort of the same. Yeah, just for interest's sake, that is not a bullish engulfing, that one there. Oh, sorry, that candle is not bearish engulfing because it didn't close lower than the previous wick. Mind you, it's still a lower close, which was indicating price to continuation, which is what we were just looking at. The hammer or the pin, this is often referred to as like a hammerhead or like a pin. This you will find tends to be at the bottoms or the tops of trends. It's not necessarily the candle that you're going to see. So here we go here. This particular one, it's put in the hammer, which it just means that it wicks down a lot lower and then it's closed up higher. So generally speaking, that would mean that price is going to retract. The hammer needs to be generally the body. It doesn't have a wick on the other side. So you won't see this as often. See if we can find a perfect example. Yeah, you're probably looking at this one. It's very close. It's not a signal that I would necessarily use that often. Oh, here we go. So this is a textbook hammer. Grab the brush. Yeah, this one right here. So as you can see, it's got the hammerhead at the top and price has dropped down. So that's perfectly, yeah, no tail whatsoever. So that's indicating that price is going to go down. And if we can find the pin, this will be difficult. Here we go. Here's an example. This is the textbook pin. This one here, they don't happen that often, but when they do, as you can see, that pin was a signal in itself that price was going to continue. Or Doji is a neutral pattern, which could means, depend on its context, that basically price is completely undecided. So the Doji is something that you will see quite often when price is consolidating and the market makers, you know, that's what we call them, it's in consolidation phase or nearing the end of it, and they're just not sure whether it's going to go up or down. That is a very good indication that the market's trend is undecided. It's not a trending market. There's just a lot of them. So this is a prime example right there. There's one. There's another one. It's just showing us that the market is basically undecided whether to close higher or lower. It's not sure what it's doing. On the weekly, this one is a lot more powerful. Yeah, there's another prime example. So they can quite often be right before price is about to break out or break down. It can be the candle quite often before a decision is made. So, for instance, that was trending up on the weekly, and then we've got a very indecisive week, and then it's gone down. Another prime example is over here. We've got indecisive. We're not sure what's happening, and then that price actually broke out and went up. Here's another one. Sorry, I pointed that out before. Yeah, indecisive. Here we go. It's generally it's meant to be in the center of the wick, but in reality, that's not always the case. So you will see them where, like, here's a good example. It's wicked lower, but I would still consider that a doji candle. And really, the body is meant to be non-existent. It's meant to be basically represent like a spinning plate on a stick. You'll see them at times. In this case here, it was used not. It was just an indecisive whether it was going to continue or not, and because it closed slightly lower, yeah, that's obviously what the market chose. Down here's the opposite. We've got the doji, and then it went up, and then here it actually hasn't influenced price that much. The market stayed indecisive all through there. Yeah, so when you see this, the market's not sure what it's going to do. That's the moral of the story. I will include the copy of this image that I've downloaded, just so you have access to it if you want, and you can print it off and put it on the wall. So in summary, I like the weekly. I find that the weekly candles can be very, very helpful when you're unsure on what's happening. So zoom out and just have a look at, see what's actually happening, because these candles aren't spoken about, and they quite often can be a sign. And yeah, if you're unsure, just go back and study the weekly chart and see what you can find that's similar patterns have happened, and you'll find that there will be a little bit of confluence there.